Good afternoon and welcome once again to WebFG TV. With us today is Carol Harmer. She is the founder of Charmer Charts. Carol, thank you very much for joining us.
You're welcome.
Okay, you're a technical trader with roughly 30 years experience trading financial markets.
Yes.
Started out in the pits in London.
I did, yes.
And you're purely a technical analyst.
Technical trader, sure, for sure.
Technical trader. Do you truly believe that just on the basis of charts, one can be a successful trader?
Oh, without a doubt.
Okay.
Yeah.
How come? What are the advantages?
Well, the advantages is the fact that all you're looking at is the price action. And you're not bombarded with a million fundamental news statements daily, intraday, daily, whatever. So all you're looking at is the price, whether a market is overbought, oversold, what are good entry and exit levels. And I don't think fundamental data can give you when to go into a market, when not to go into a market.
Okay. Before the interview, you were explaining to me your experience in London when you started out as a trader.
Sure.
All of the traders were saying go short the long bond.
Yep.
You went the other way.
I did.
Why?
When we first started on the floor, everybody was selling the bonds. And being a complete novice, I saw them going up. And I didn't quite understand. And then one day, about 3 months later, I was walking behind one of the booths. Late at night, I was waiting for an M1 figure to come out. And there was a guy there, and he was updating charts for the following day. And I said, wow, you know, what are these? And he explained, and he showed me that the 30-year bond had been in a downtrend bear market for 7 years, sideways for 2, and we'd just broken out of this sideways trading band. So all the traders that were trading the bonds had only ever worked in a bear market.
Right.
So they'd always make money selling. What they didn't know was that the trend had changed.
Right.
So I said to my boss the next day, can I go and buy some? Derision all round, but off you go. And I did. I went and bought my 5 lots. It went up, I bought another 5 lots. At the end of the day, sold out my 10 lots. And then I kept doing that. And I tried to explain, you know, that the market's going higher. And it was like, shush, it's going, the bonds are going down.
Typical boss.
So I said nothing. I just went in, did my own thing, and didn't listen to anybody or anything. First big lesson, no one knows more than you do.
Okay.
No one. So you've got to trade how you see fit and what works for you. And that worked for me. It was like a light bulb going off.
I see.
And put me firmly on the side of charts and technical analysis to trade with, rather than a million economic figures daily that really nobody knew where anything was going. And this was in the days of the intervention with the big major central banks.
Right.
So, you know, who I have to say always intervened at a chart point. So for me it works, you know.
And for them as well.
If it's fixed, don't break it. You know,
Indeed.
that's it.
Okay. Also, you were telling me before the interview the importance of controlling emotions. How do you do this?
The thing with charts is that it should take the emotion out of trading. Most of the traders that will fail, they'll take a position and automatically they are long or short of the market.
Okay.
And that irritates them, you know, and if it goes against them, are they right, are they wrong, are they this, a million emotions go through your head. Trading the way I do, it should take out that emotion because you know where you're wrong. You have a target, you have an entry point, you have an exit point, and you should be able to just put those orders in, leave it, walk away. We don't as traders by nature. We look at it, you know, constantly. But over the years I've learned to stand back is probably better than sitting there in front of a screen all day long, which is where the traders of today make the mistake. You know, and if I could change one thing that they do, it would be that.
Okay, traders make mistakes. Potentially you can lose a fortune. You can lose a lot of money.
Of course you can. But you'll lose more. You see, with charts, you know where you're wrong, as I said before. I'm quite happy to be long or short of the market as long as the technicals and the charts tell me this is the right way to be. As soon as something tells me I'm wrong, I'm out. For example, the other day we were short of the euro.
Yes.
Okay. The reason of being short of the euro was the fact that it had broken through the 200-day moving average. It had gone through it. Now, we'd been staying above there for quite some time.
Yes.
We broke. You're not going to hold a long position, okay, at that point. The market came down. It didn't go below 134.80, which was our entry point again, around the 135.10, 134.80, go back into the euro. We then screamed up, back above the moving average. It tells you, charts tell you a story.
Right. Okay.
And they paint a picture. And it's visible, it's there, you can see it. You don't hear it.
And it's real time.
It's real time. And you don't have to decipher it. You know, it's you can see it.
Whereas, trust prices.
Exactly. But if you're listening to people talking about fundamentals, you have to interpret what they say.
Right.
Now, if you've got a panel of economists that can't agree on what they're saying,
tends to happen.
How can you know, as the retail trader sitting at home, how can you understand it? The price is always right, whether you're the wrong way or the right way. That's the price.
Okay. The price is always right. And when people lose money, you were telling me before, approximately what percentage of amateur traders
I have heard
lose money?
From very many spread betting companies, it's up to 95%
outrageous
of traders, retail traders, that will fail. It's too high a percentage. You know, they are just putting their money into a trading platform and they're not knowing what they're doing.
Right.
And you've really got to know what you're doing. You've got to have a strategy.
Weapons in the hands of children.
Absolutely. And that's really sad because it's a fabulous thing to be doing. It's really exciting, and it's, you know, I wouldn't have been doing it for 32 years if I didn't find it exciting. I do. Even though I trade with the charts, to me they're still exciting every day. And I do believe that unless you get education to the retail.
That's critical. You were telling me before, education. You have to dedicate a lot of time to learning.
You do. In the old days when you was working in a bank, it would take you 5 years to work your way up to become a junior trader. These days, anybody can open an account and trade. No one tells them how. No one explains why. They just trade. And it's gambling.
But for everyone that loses money and leaves, there's 10 waiting to come in.
Oh, absolutely. It's big business.
Casino.
And the business isn't to make you money. It's to get your money.
Exactly.
It's the difference. You know, what I would like to do, and I don't know how, is to try and educate people into, it's not hard. People make too much that it's so difficult to trade.
Okay.
It isn't.
So you do recommend trading?
All the time. Yeah, of course, without a doubt. Because, you know, what's the point of a chart if you don't trade off of it? There's no point, is there?
It just has to be done properly.
It does. It's like being a chef, mixing all the ingredients to make a fantastic meal and then not cooking it. Pointless.
Indeed. Yes.
You know, and I find that unless somebody trades, you can't advise people because you have no idea how it feels to be a trader on the wrong side of a position. You know, I've traded bull markets, bear markets, sideways markets, so nothing phases me anymore. I've seen all the different cycles, so they've got to relax into it and not worry about it. And, you know, look at the things that are important.
So time, experience, learning, discipline.
All of the above, what you've just mentioned, all of it. Now I know today when it's bombarded on the TV to you that, you know, put your money in, you can get rich quick. It isn't the case. If you do, it's because you've gambled, not because you know what you're doing.
Right.
Okay? And you might as well flip a coin, buy, sell. No. There are specific buy entries, specific exit levels, take profit levels, you know? Fear and greed will run a market. And it's fed on these people that don't know really what they're doing.
Right. Okay. Let's say, do you have a specific trading specific pattern, chart pattern, or indicator which you follow, which you would recommend in particular?
A chart pattern, they're just too numerous to mention.
Okay. Good point.
They really are. That will come with experience and defining where the patterns are. But technical indicators that I use would be stochastics. Okay, a slow stochastic.
Right.
Moving averages for support and resistance level, not the crossovers, because by the time it's crossed, the market's gone away from you anyway. So what you could do is, I trade once they break the level. I don't wait for them to cross. I trade on the breakouts. You define your patterns. You've got triangles, rectangles, God knows what, double tops, double bottoms, head and shoulders. There's a rake of them.
You were telling me there were about 400?
There are 400 studies that are available on the platform that I use. I use 5. I've always used the same 5.
May I ask which 5?
Yes, you can. Stochastics, RSI, moving averages, pivot points, and MACD. That's it. I don't use any others because you'd be in the same position as what you would be listening to all the news coming out all the time. What one do you look at? What's flavour of the month? And I hear it time and time again. Have you seen this? Yes, it doesn't work. But, you know, people have to learn by their mistakes. That's the only way. Sometimes, though, the mistake wipes them out and they can't get back into the market.
So trade small at the beginning?
Trade's very small at the beginning. Run a dummy trading account for 6 months. That would be my critical advice to you. Run a dummy trading account for 6 months. It sounds a long time, but if you're going to do this for the rest of your life, it isn't that long to learn what you're doing. And even when you go live, small, tiny amounts, learn. Because that first trade you take when you've gone live will be the one that freaks you, or makes you into a proper trader.
Okay, fantastic. So with 30 years experience in financial markets? You say 5 studies, that's it. Okay, if I may, one last question.
Sure.
Specific forecasts for some of the major currency pairs?
Specific forecasts, okay. I think currencies are going to increase, they're going to go higher. I can see quite easily 140 on the euro within a very short space of time. 173, 175 on the cable.
Okay, fantastic.
The euro sterling, I think we just leave that one, that's going down south a lot. The interesting 3 are stock markets, oil and gold.
Tell us.
I'll tell you. I think oil is going to come under pressure at the 105 area. You've got to be very, very careful. We've come up a long way in a very short space of time. Be careful of that one. Don't go long of oil unless it breaks the 105 and a half. With sterling, don't go long unless it breaks 170 and a half. You've got fund managers out there selling the hell out of it right under that 170 area, because the next critical level is 174, 175. So there's your parameters of why you're trying to keep it below 170. Because it's the next psychological level it will go to. The Euro Swiss, well, we know that they want to keep it, you know, buoyant. So every time it gets towards that 120 area, it's bought up again. But basically, I think you're playing currencies from the long side for the next few weeks until we get this summer period out of the way. Then we look again. Personally, I think currencies go down towards Christmas. But at the moment, we go higher.
Direction is higher.
Sure.
Fantastic. Well, Carol Harmer, founder of Charmer Charts.
Yes.
Thank you very much for your time. We hope to have you with us again next year.
Thank you. You're more than welcome.
Thank you very much.
And that's all from all of us here at WebFG TV for today. Thank you very much for your time.